How to start investing with little money. Let me ask you a question. What if I told you you don't need thousands of dollars, you don't need a finance degree, and you don't need to be lucky to start investing and building real wealth? What if I told you that starting with little money is not a disadvantage, it's actually an advantage if you play it right? Most people believe investing is only for the rich. They think you need $10,000, $50,000, or even $100,000 to begin. That belief is the number one reason people stay broke. In this video, I am going to show you step by step how anyone can start investing with little money, even if you are starting with $5, $10, or $50. By the end of this video, you will know where to start, what to avoid, how to grow money safely, and how normal people quietly build wealth over time. So if you're tired of living paycheck to paycheck, if you want your money to work harder than you do, and if you want financial freedom in the future, watch this video till the end. Part 1. Why starting small is actually powerful. Let's kill a dangerous myth right now. I will start investing when I have more money. That sentence has destroyed more futures than bad investments ever did. Here's the truth: you don't get rich by waiting, you get rich by starting. Think of investing like going to the gym. If you wait until you are already fit to start exercising, you will never start. The real power of investing is not how much you invest. It's how long your money stays invested. The time advantage. Time is more important than money. A person who invests $50 a month for 30 years often ends up richer than someone who invests $500 a month for 5 years. Why? Because of compound interest, money making money, and then making even more money. Albert Einstein once called compound interest the eighth wonder of the world. You don't need big money. You need consistency plus patience. Part 2. The mindset before you invest. Before we talk about apps, stocks, or crypto, we need to talk about your mindset. Because investing with the wrong mindset is gambling. Rule 1: investing is not getting rich quick. If you want fast money, you will chase hype. You will panic during crashes. You will sell at losses. Smart investors think long-term. They don't ask, how can I double my money this month? They ask, how can I grow this money over 10, 20, or 30 years? Rule 2: you must be comfortable with small wins. Your first $10 investment won't change your life. But what it will do is build discipline, build confidence, build habits. Small habits create big results. Part 3. Step 1. Fix your financial foundation first. Before investing even $1, you must do this. 1. Eliminate high-interest debt. If you have credit card debt, payday loans, high-interest personal loans, these off first. Why? Because earning 10% in the stock market while paying 25% in interest is financial suicide. 2. Build a mini emergency fund. You don't need 6 months saved yet. Start with $300, $500. This protects you from selling investment. 2. Early panic decisions. Debt traps. Once this is done, you are ready. Part 4. Where to start investing with little money. Now let's talk practical. Option 1. Index funds. Best for beginners. Index funds are collections of hundreds or thousands of companies. Instead of betting on one stock, you invest in the entire market. Examples: S&P 500 Index, Total Market Index. Why index funds are powerful: low risk compared to single stocks, low fees. Long-term growth. Many platforms allow fractional investing, so you can invest with as little as 1. Option 2. ETFs, exchange-traded funds. ETFs work like index funds but trade like stocks. They are affordable, diversified, beginner-friendly, perfect for small investors. Option 3. Dividend investing. Slow, steady income. Dividend stocks pay you cash regularly. Even small dividends teach you patience. Reinvestment. Passive income mindset. Reinvest dividends early. This accelerates growth. Part 5. Apps and platforms for small investor. Technology made investing accessible. Today you can invest using your phone. Look for platforms that offer no minimum investment, fractional shares, low or zero commissions. Important: choose regulated platforms only. Avoid guaranteed profit scams. Part 6. How much should you invest monthly? Here's the honest answer. Invest what you can consistently without stress. Even $10 week, $25 month. 1 day consistency beats amount. The 50-30-20 rule, simple version: 50% needs, 30% wants, 20% saving and investing. If 20% is too much, start with 5%. Increase slowly. Part 7: Common beginner mistakes to avoid. Avoid these mistakes at all costs. Chasing trends. If everyone is talking about it, you are late. Panic selling. Markets go up and down. This is normal. Overtrading. Buying and selling too much kills profits. Listening to gurus. If someone promises fast returns, run. Part 8: Realistic growth expectations. Let's be realistic. Investing is boring, and that's good. Average long-term market returns 7–10% annually. That does not sound exciting until you realize what time does. Example: $50 month for 30 years equals over $60,000 plus. That's with small money. Part 9: Staying motivated when results are slow. Most people quit too early. They invest for 6 months, don't see magic, and stop. Wealth rewards patience, not excitement. Track contributions, daily price movements. Focus on the process. Part 10: Final advice and call to action. If you remember only one thing from this video, remember this: you don't need more money. You need more time in the market. Start small. Stay consistent. Think long-term. Your future self will thank you. If this video helped you, like, subscribe, share it with someone who needs this, because the best time to start investing was yesterday. The second best time is today.